Okay, what's up? Money morning. How to make a budget and budgeting tips for beginners. This has been requested by quite a few of you, and it escapes many still for some reason. So, after some technical difficulties, we've got it sorted out. Andrew can now share his screen. He has a budgeting sheet, which we're going to throw up for you guys to follow along. So, anything you want to say before you do that?
No, just want to say good morning to viewers. And yes, after some technical difficulty, I am able to share a couple of documents on my laptop. So I am going to share a document, which is a client's copy of a financial capacity assessment form right there. So if Richard is got that approved.
Can you press the zoom button on your screen so you can make it bigger?
The zoom button on my screen. You want me to make it bigger than what it is? All right. Is that big enough?
Well, you have to put it back up now, man. You took it out of the share.
Well, I didn't take it out of the share.
Andrew's not very technically advanced when it comes to stuff like this, so you're gonna have to bear with us. Okay, now click the tab. There you go. And then on the bottom right, you see the plus button there?
Yes, I did. That's exactly what I did.
There you go.
That's exactly what I did.
There you go. Okay. So walk people through the financial capacity and why this is important.
All right. So this is a financial capacity assessment that we've provided to a client, and the client filled out and sent back to us. I've redacted two areas where the client's name was listed. So obviously for privacy reasons, we can't list the name of the client. This form has been somewhat manipulated. I'm not too sure how the client was able to do it because we send it to the clients in a PDF format, but I know there's a PDF or a PDF version of manipulation. So I'm assuming the client used some software to do that. Anyhow, so this client here had put in income at the top and expenses right below the income. And essentially this gives the individual an idea of their current budgeting situation. Now, we've done many shows in the past about how budgeting is very important in your day-to-day lifestyle and how it allows you to be on top of your finances and debt if you've got debt. So this is the reason why we're doing the show here, is because we want people to see what kind of financial form you can use. Now, we obviously have a form.
Does this form, by the way, have assets and liabilities on it?
It does at the bottom. I'm just showing you the top part of the form first.
Got it. Okay, so there's two main things to consider, guys. You've got income, expenses, assets. Sorry, there's four. Income, expenses, assets, and liabilities. What you earn versus what you spend. So you take what you earn, subtract what you spend. That's your net. And then you also want to look at your assets versus your liabilities. So let's deal with the income versus expenses part first.
Yeah, the income versus expenses is the most important thing, factor, really, for those that are living on paycheck to paycheck. They want to make sure that their finances are in check. So this individual here, as I indicated, I've redacted the name. As you can see in the top left-hand corner of the page, it would have the individual's name right there. This person makes $1,500. It's essentially part-time income on an average per month. So it varies. It fluctuates from paycheck to paycheck, but essentially the paycheck showed that the average was $1,500. There's also child tax credit income that this individual gets from the government for the children. I believe it's 3 children that this individual has. So there's a total of $1,040 received from the government. So the total household.
Is this a couple or is this a single mother? Like, what are we looking at here?
This is a mother, and I can't recall if it's a single mother or if she's partnered up. I can't recall. But this is her financial profile because she's the only one that's a client for us.
Okay.
So we're basing it on her financial position, which is what you're seeing on the screen here. So her income is $2,550, essentially, just rounded up from 2,540. And from there, these are the expenses that this individual has. She's paying $960 for rent. She listed that down there. Groceries for food is about $1,000. Now that will fluctuate from month to month. There's some expenses on a form that you will realize are set, and there's some expenses that you'll see on your budgeting sheet that will be variable. So stuff like mortgage payments, rent payments, car payments, insurance payments, things like those will be set monthly payments. They will not fluctuate on a monthly basis. Now they might fluctuate annually when your rent might change or go up, or same with your mortgage payment. If you're on a variable rate, your mortgage payment might change if you're on a variable mortgage payment schedule. But essentially there's about half of your payments are set in the same amount, and then half your payments will be variable. So groceries is pretty much your biggest variable expense on a monthly basis, depending on what you've got going on for that month. But as you can see, there's a column pretty much for everything here that we have on our form: childcare, medical, cell phone, home phone, cable, internet, hydro, heating, water. So those are your utilities. Public transportation for those that don't drive, gas, car maintenance, car insurance, home insurance, life insurance, clothing.
I have a question for you. For you because we need to get from point A to point B. So why is there no expense for transportation, whether it's public or car?
So for this individual you're talking about?
Yeah.
Okay, so well, I don't know this individual's situation off the top of my head. It's not one of my files that I'm working, but if it's no listed public transportation, then that means she doesn't use public transportation. And if there's no cost listed for gas.
Does she live downtown? Does she just walk around? Is that what she does?
Well, she lives out in BC I think it's Vancouver. So
okay, so it could be a walking situation then.
It could be a walking situation, but if you scroll down, I'm pretty sure you'll see a vehicle. No, there's no vehicle. So yeah, I would assume that she doesn't drive and she doesn't have a license, and maybe her partner is the one that does all the driving around for her and the children.
Got it.
But on this budget, there's nothing there for car insurance or car maintenance and gas. But if you keep going down, there's pretty much a section for every expense. And what I always suggest you do is, rather than just list what you think you have as expenses on the top of your head, because when we obviously just give this form to our clients, so our clients can look at the section and say, oh, childcare, I don't pay for that, 0. Medical, well, I don't pay anything for any medication, so I'll put 0 there. So if you have access to this form, we're pretty much prompting you with the answers. But if you don't have access to a form like this, the best thing you should be doing is having in front of you a copy of your bank statement, your checking account statement, that is, all of them. So if you have 2 checking accounts, you got both the statements printed in front of you. Same goes with credit card statements. You have all your credit card statements and your checking account statements in front of you with a piece of paper, and then you start listing the expenses, and then you start tallying them up. So that way you have every expense. Because if you don't have access to this form, you might not know what expenses you have, and you just think, oh, it's groceries, mortgage, rent, whatever it might be, and you might leave off quite a few items. So you should have the information in front of you, which is your checking account statement and your credit card statements. And then you just essentially fill out the expenses. Now on this form, you can see at the top, the total income was $2,540, and the total expenses are $2,525. And as you can see here on this example, this individual is contributing to our plan $600, $630, which is why it brings her expenses to $2,525. That leaves her a cash flow surplus of $15, which is very little.
How much credit card debt does this person have that they're enrolled to get out?
Well, actually, this client here just completed our program. This form she gave us approximately a month ago when we were just about to complete her final settlement for her. Mm-hmm. So her 3 debts that were enrolled are now settled. And I believe the enrolled amount of the debt was about $18,000. So this is rounded up to $20,000 for simplicity's sake.
Okay.
So $20,000 of debt. Actually, it might have been more than that. Now that I'm thinking about it, there's 3 debts, and the one we just settled was $10,000. So I actually think the debt was actually quite a bit higher than 18.
Okay.
Either way, if we scroll down, then there's a second section of the financial form, which I call the second section. So the top section is your income versus expenses, and the second section, which is the bottom of the form, is your assets versus your liabilities. And that essentially gives you your net worth. Once you subtract your liabilities from your assets, it gives you a net asset, net worth at the bottom, and that tells you what your net worth is. So this form, again, it prompts you to put in the information that you need to put in based on assets and liabilities. So as you can see, house, property, so that's condo, townhouse, property, cottage, anything like that, you put in your asset for your house. Vehicles 1 and 2, we've only listed 2 vehicles here because essentially no one really has more than 2 vehicles in their name. Some people may, but we don't really represent the type of individuals that have more than 2 vehicles or even more than 1 vehicle. So you list the valuation of the vehicle. If there's a cottage or a trailer, you can put it in that section, and then savings, investments, other can go in the other box. And then below it, there's your liability. So a mortgage is a liability. And the reason why a mortgage is a liability is because it's something you're on the hook for. So if you're on the hook for something, and that something is certainly secured, which it is, a mortgage will be secured to your property, that will be your major liability. So that's your first one we list: mortgage, any taxes you have in arrears, so property taxes, income taxes, because If you owe anything to the government, that really does take priority. The government are not too forgiving, and if you owe them money, they want their money in full and they want it immediately. So if there's money owed to the government, we do need to know about it, and then arrangements need to be made with the government to repay what is owed. And that can be CRA money, so income tax in arrears, or that can be property tax money to the municipal if you owe money on your property taxes. And then essentially you fill out the boxes and then you'll get a total net worth. So you have a total asset column, a total liability column, and this individual here doesn't have a house or a vehicle, so she has no assets. And under the liability section, she filled out 0 for unsecured debt. She should have actually filled out how much money she owed on the credit cards, but she did not. But essentially, like I said, that was probably over the $18,000 mark, but she had no mortgage, no tax in arrears, no car loans or car leases. And actually, in fact, she has 2 children, not 3. I thought it was 3, but it's 2 children she listed here. And then I redacted her name below.
Did you say that you had another sheet that was blank that you were going to work through, or?
Yeah, so my system is probably still sharing. Can you see this one?
Yeah, can you zoom that one a little bit? Just hit the plus button on the bottom right.
Yeah, so this is
a little bit more. Keep going. Okay, that's good.
So this is the form that we send to our clients. This is a blank one. And it just basically says, please include all your details as accurately as possible. Provide proof of your income. So we either need a pay stub or a notice of assessment. Pay stubs are best because it gives you an up-to-date calculation of what your net pay is. A notice of assessment is only really handy if you're self-employed and you don't have your pay stubs or you don't get paid through a pay web provider. So notice of assessments are really only good for those types of individuals. And this is the form that the client was able to use, type in her numbers and information, somewhat manipulated it to her, I guess, to her effect. And at the bottom is a list of your income, your assets and your liability. So I just want to let everyone know, the viewers know, I actually do my own financial capacity assessment form, generally speaking, twice a year. If I remember to do it twice a year, if I don't remember to do it twice a year, it's certainly once a year. And I also pull a copy of my credit report minimum twice a year. And if, again, I forget to do it twice a year, then I'm looking at it once a year. So I try to keep on top of my own situation by doing my own financial budget form, so I know what my income and my expenses look like. And then I also pull a copy of my credit report to understand what my credit report looks like.
All right. So I posted in the comments if this makes sense. I didn't see anybody ask a question. We did get a question here from, let me just remove the screen here. Marta says, does your business settle debt for American customers? No, we don't, only in Canada. So if you're in America, I'd recommend freedomdebtrelief.com. My friend Andrew Hauser owns that business. He's a good guy, and it's a proper setup. So
actually, we can if the debt is Canadian debt, which
right, yeah.
It's not where you live; it's where the debt was initiated. So if you were in Canada at the time when you had all this credit card debt on Canadian creditor accounts, we can help you regardless of where you live.
So if you're an expat, you live anywhere else in the world. We have a lot of people that are Canadians that have Canadian debt, but they're now in Hong Kong, Gibraltar, wherever. We've talked to thousands of people around the world and helped lots of expats. But if you're an American resident living in the United States with American debt, talk to freedomdebtrelief.com. So that should be fairly straightforward. You could create this on an Excel spreadsheet. I mean, it doesn't take much to put a budget together, just like Andrew showed on the screen. If you want to back the recording up and then pause it, all you need is your total income minus your total monthly expenses. That's your net cash flow. It should be positive, and if it is positive, you should be squirreling away money every single month into a rainy day fund until you have enough money for a minimum of 6 months living expenses. If you're net negative, meaning you're spending more than what you earn, so there's more month at the end of the money, you may run out of money by the 28th, by the 20th. It's a common phrase that we've heard people say. They'll call in. It's like, well, my problem is I've got more month at the end of the money. Okay, got it. So you're negative. That means that you've got way more in the way of expenses versus your income, which probably means you don't have any assets, or if you do, there's liens that are going to be executed against them and you're going to lose them. You have a problem. Down below, if you have more than $15,000 worth of credit card debt and live in Canada, you can learn how to legally reduce it by 50 to 70% and get out of credit card debt in less than 4 years. This guy over here runs the shop. He knows exactly what he's doing. He's not technologically inclined to know how to share a screen, but he's a wizard when it comes to settling debt. He's been doing it for a long time. So you can go to totaldebtfreedom.ca and get a free quote, learn what the next steps are. Don't just fill out the form. If you go to the website to get the quote, make sure you schedule in a call, because they are busy and they're not able to take all calls, or all calls may get, thrown around if you just fill out a form, because they'll call back and you're playing telephone tag. So schedule in a call with a representative so that you can take it to the next step. Anything else you want to add before we wrap up, Andrew?
No, I just wanted to add that I want to stress it's extremely important that when you're doing the budget, that you do have those statements in front of you, the checking account statement and your credit card statements. You will not know for certain what your expenses are unless you have those documents in front of you. Nobody is going to know every expense off the top of their head, what they're paying for on a monthly basis, unless they have those documents. So if you're going to do this exercise, you got to do it right. You got to get all those documents in front of you, and you got to do it with a spouse. So if you're living together with someone, you got to do it together, because you can't do it by yourself when there's two people in the household bringing in money and two people in the household spending that money. You need to do this project together, and hopefully when you're doing it together, you're not bickering and arguing with each other and then fighting about your expenses that you shouldn't be paying for. But it's essentially a project that needs both parties of the household together and with all the information at your disposal.
I think we've done enough on this show today. Maybe next Saturday, why don't we do one more specific on making adjustments? Like, you've seen a lot of these forms and different size families, whether it's one income, 3 dependent household, or 2 income, 1 dependent household sort of thing. And you've seen what people spend on food, utilities, cable, pleasure and entertainment. I think that there's probably an opportunity to have a conversation when it comes to budgeting about where you can make corrections in your budget, because we've seen people that might be a 2-person household and they spend $2,000 a month on food, which is absolutely absurd. Or they might have like a cable internet budget of $400 a month. Okay, let's start talking about that. So why don't we save that for next week for a topic? Sure. If you guys have any follow-ups on anything on this broadcast that doesn't make sense, leave a comment below. We'll take a look at it. We'll make sure we incorporate it in the next one. Cool?
Excellent.
All right, we'll see you guys in the next one.